Hello everyone, this is Karen Saber, your instructor, and I just want to give you some information on the next couple sections that we'll be going into in H&T 220. We're getting ready to move into operating revenue. The first chapter is Chapter 5, Third-Party Payment. This gets into the history of third-party reimbursement, classification, managed care organizations, and financing and delivering healthcare. Some of this information you've already heard in H&T 212, 210, in the beginning of this course, H&T 220. So I'm going to let you read over those brief pages so it can bring back some of those memories of that wonderful material you had. If you turn to page 104 in your book, we're going to talk about methods of payments. Guys, the first thing a provider does is determine their charges. Every healthcare organization has a list of them. Charges, you could say, is prices or rates for providing care to patients. And the organization may set charges based on the care provided. Several methods of setting charges are discussed in Chapter 8. We'll get there later, but this is just to let you know that the charge that you charge for one patient, you have to charge for every patient that you see for that specific visit or procedure. When it comes to reimbursement, when you sign managed care contracts or if you sign contracts with Medicare and Medicaid, you usually take a discount. With the private ones like Blue Cross and Blue Shield, you normally get reimbursed at 80%. With Medicare and Medicaid, it could be anywhere from being reimbursed 60 or 70%. Hospitals, you usually charge per diem, and there's also a per diagnosis, so those rates could be different. On page 106, they get into capitated price. That's where if you sign a contract with an insurance company stating that you will take care of this patient no matter what services they need at $700 a year. So what they've done is they put a limited amount of money they'll pay per patient. It doesn't matter what procedures and things you do, you're still only going to get reimbursed a certain amount. On page 107, they get into bad debt and charity care. If you remember, guys, you won't be reimbursed from this. This is most of the time providers have to write this off. They do get some benefits from doing this. The county or the state will normally give them tax breaks on business income, on their taxes or business licenses and such things like that. On page 108, we're going to be, with this chapter, is going to be cost shifting and cost cutting. I'm going to make this a 2-week that we'll be working on this chapter. The first part of the chapter we're going to do is cost shifting. What businesses, no matter what services they're providing, they want to break even. So the ones who pay normally pay for the ones who don't. So this is kind of like in that situation. We're trying to get those who pay really good to take care of the discounts that we had to give. So guys, cost shifting is the practice of transferring costs to some payers to offset losses from other payers. It occurs in every industry, and like I said, most people want to be in the black and not in the red. The red means that you're in the hole money-wise. So if you turn to page 111 in your book, the problem I assigned you is just going to be just like this one on page 111. And what I would suggest is that when you're doing it, that you set them beside each other and you do it step by step. At the top will be your information. So with this practice, ABC Healthcare Organization, they have 100 patients, and they determined that 30 were Medicare, 20 were Medicaid, 15 were managed care, 15 were another 15 were managed care, 5 were private insurance payments, 5 were self-pay, 5 bad debt, and 5 charity. With Medicare, guys, it doesn't matter what you charge, they're only going to reimburse you $850. For Medicaid, it's $900. For managed care, the first one, it's minus a 20% discount, so they're only going to pay you at 80%. And then the 15 managed care patient, this is that capitated I've told you about, no matter what you charge, they're only going to give you $700 per subscriber per year. You got 15 private pay who paid 100%, 5 self-pay who have paid 100%, and the 2 last ones will be written off. Step 1 in your problem, guys, is set up exactly like this, and your homework will be, you see where you got your financial class, the number of patients that we gave from the top, your cost, guys, what you're going to do is you take your 30 patients, an example with Medicare, times 1,000, because that's their cost is right in the middle of the box. So 30 times 1,000 is 30,000, and your charges, as we said, was going to be 1,000, so you're going to do the same thing. 30 times 1,000 is 30,000. Excuse me. So your collections here is what's going to change. What you're going to do is you're going to take that 30 times 850. You're only going to get reimbursed at 25,500, and you subtract 25,500 from 30,000 of your charges, and your profit is going to be a negative 4,500. You do that for each one of your payers. After you're done completed with that, you're going to total your lines, and you see right now this company's in a negative 24,000. If you turn over to page 112, we're going to show you how to shift some of this cost to other payers. At the top, you'll see 24,000. That's from page 111 where we just put our total at. And we're going to look at the payers who pay either at 100% or it doesn't matter what the charge is. Even if I up it, they're still going to give me 80%. So the first one is that 15 for that managed care. If you take 15 times 0.80, you get 12. So then you're going to have 12 plus 5 plus 5. And that, guys, if you add them up, it's going to give you, 12 plus 5 plus 5 gives you 22. So what we're going to go over here is we're going to put 24,000 divided by 22 equals $1,091. And then the problem gave you another additional $1,000 to break even. So your total charge now is going to be $2,091. So then you go below, you set your chart up again. Financial classes, the number. Your cost is not going to be different. It's going to be the same. But we're going to do different with the charges. So you're going to take 30 times $2,091. You're going to get $62,730. But our collections, guys, remember, Medicare only pays $850 per diagnosis, so you're going to have to take that 30 times that 850. That's going to give you $25,500. And if I subtract $25,500 from $30,000, it's going to give me a negative of $4,500. So subtract your collections from your cost, and then you tally your columns, and then that's going to show you your totals. And at this point, we're going to stop here because that's that cost shifting. And then the next week after, we'll talk about cost cutting. So hopefully you understand this. If you have any questions, email me or call me. But I would tell you, I'm assigning the problem on page 119. I would put this down right beside them and do it step by step. If you have any questions, contact me. Thank you and have a good day.